tractors to make sure that they get the job that they so dearly need so that they can service the loans.
P.S. Allow me to ask, just so one smallholder farmer and our viewers as well can get an appreciation of how fast the project is moving. How much in loans have so far already been approved?
Okay, we were hoping that we could get, say, up to 50 people per financial year, and we are still hoping for that. So far, 7 farmers have committed, and they've been granted the loans. They've been approved. So now they will be buying the tractors shortly from John Deere. What we have decided to do is not to limit them to the kind of attachments for the tractors. They decide. The basic amount would be between 450 to 500,000, which would be the cost of the tractor. And then you can decide what sort of additional equipment will be coupled to the tractor that you will need. This extends the price to up to about 1.2 million. So it is the farmers themselves that will decide on the kind of type of attachment that they will need for their tractors.
So if I hear you correctly, PS, it's 7 farmers approved. Specifically, what could be the monetary value, or if you could just quantify that one for us in emalangeni, the total?
Yes, so far it's a commitment of about 7 million emalangeni, 7 million.
First 50 packages have arrived under this mechanization drive. Where exactly do they go? Who are the farmers, or in what sector are the farmers really standing to benefit? Is it grains? Is it livestock? What exactly are they looking to then utilize this financing in?
Yes, so far we are looking at maize farmers, and that is why we have given them these contracts with NMC. Maize, as you will recall, is our staple food. So we are looking at producing, we have a target of 140,000 metric tons that is consumed in the country every year. But we are only capable of producing between 70 and 80,000 metric tons. So we really want to scale up and push the maize production. So the priority so far with these tractors would be to provide a bigger yield when it comes to maize production in the country.
P.S. Why is it that it was so crucial for the ministry or the partners involved to decide that they are going to route beneficiaries through the contracts with NMC? What about some of the farmers that don't have a contract with the NMC, but they do need this type of financing? They do want to scale their commercial businesses.
Yeah, these contracts with NMC are free and available to every tractor owner in the country, especially the ones that we contract out. They are available. The farmers are at leisure to go and organize these contracts, and it's not a big deal. But what we are simply saying is that for those who have bought tractors through this program, we want to make sure that they never get to a point whereby the tractors lie idle and not produce for them, because that will mean that they will not be able to service their loans. So we have guaranteed that these people have these contracts with NMC, and it's very important even for us as a support as Minister of Agriculture, that we know that we are not putting these farmers into a situation whereby they will risk losing their resources simply because they are not in a position to service the loans. We need to provide these contracts for them so that we make sure that the tractors are used and are able to give them some income that they will use to service the loans. Otherwise, the contracts even if you go today, talk to NMC as an individual farmer who may not be involved in this program, you'll still have the contract with NMC. It's just to make sure that your tractor will be operational all the time.
The agricultural sector currently tops the national agenda, and of course, food sovereignty, national food sovereignty is on top of the list alongside import reduction. We are 1 year, at least we're yet to complete a year with this mechanization project in place. What are some of the targets, the measurable targets for this program in terms of hectares that are at least expected to be serviced, yields increased, and of course the reduction of imports?
Yes, thank you so much for asking that question. So far, we are hoping that on a yearly basis, we are going to improve by about 10 to 20,000 metric tons. We have realized that the bigger bottleneck or the bottleneck around delivery of maize in the country is the provision of these tractors. So now that we have more tractors in the country, we're hoping that the maize production will improve. Of course, we're not just hoping that we'll end up with these 7 farmers. We are hoping that many people will see this as an example. And hopefully, if this year we have a small number, hopefully the following year we're going to get more farmers to join the scheme. And yeah, that is our target. We want to make sure that by 2028, we are covering the whole 140,000 metric tons consumption that we need as a country, and want to make sure that it is produced locally.
PS, we'll leave it here for today. Thank you very much for your time. That was Principal Secretary in the Ministry of Agriculture, Sydney Simelane, unpacking the performance and progress so far of the 250 million emalangeni worth support for agricultural mechanization project that was rather launched or signed in an MOU with the U.S. Embassy in December of 2025. Moving on with the program, we'll go for a break right now. When we come back, we're in conversation with in-house economist Zanele Sibia.
Viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back. Thank you very much for choosing to stay with us right here on Market View. Now, moving on to our market analysis segment, in-house economist Zanele Sibia joins us virtually. Mr. Sibia, how are you? I hope that your day is going well so far. It's the second trading day of the week. Allow me to ask, how are expectations for U.S. tech earnings this week driving global equities?
Good afternoon, Notsile, and good afternoon to the viewer. So what we're seeing today in today's markets is actually the fact that we're seeing NVIDIA and other tech stocks continuing to drive growth, more especially in the US, amid this potential crisis shutdown, or also we're also expecting the Feds to give us an outline in terms of how they're going to go about with the interest rate. So with that, we're seeing the Dow Jones Industrial Average up 313 points, and then the Nasdaq Composite Index is up 100 points. The S&P 500 is actually up some 34 points. So a bit of that rally, not also transcends into the European markets with the FTSE 100 sitting at around 42.75 points today. We're seeing a bit of de-escalation in that Greenland story. We haven't had much around that. So we're seeing a bit of bounce back in terms of, the banks in the US and in the UK, and the miners are doing relatively well within the UK economy. The German DAX is shut down some 14 points, just given the movements within the German economy and how well we're going to move towards, maintaining this export-led economy within the German front. CAC 40 in France has gained some 5.27 points, largely driven by, positive earnings and, the surge in luxury spending. We know that the Paris Stock Exchange contains quite a lot of luxury companies. And then coming through to Japan, we're seeing the Nikkei. It's up 448.29 points. So it just shows that markets are somehow focusing on, the earnings and also focusing on the positives that are coming through from the markets. And, it seems markets are now shunning, that fiscal instability, and I think they're adopting a wait-and-see approach within the Japan Stock Exchange. And then when you look into the Hang Seng, there we can see the positive news around the tech stocks, really just reverberating on that side of the globe. We're seeing Hong Kong, reaching record levels. We're seeing 27,126.95 in terms of all-share volumes coming through from the Hang Seng markets, not just showing that the confidence has returned into Hong Kong, and the tech sector is leading those, albeit the fact that we have bubbles that might explode at any time, more especially within the property sector in Hong Kong. And then in the mainland China, we're seeing the Shanghai Composite Index flatlining around 439.39.90 in terms of all share volumes. That's largely driven by the fact that we're waiting to see, that there was export data that came out and it didn't show the performance that markets needed. And what markets are waiting to see right now is what kind of stimulus is the government going to put into the market to ensure that we drive growth. And we haven't seen those stimulus ever since the beginning of the year, yet markets are waiting keenly and watching out for those. And then coming into the South African Stock Exchange, Johannesburg has hit yet another all-time high in terms of all share volumes, clocking in the 124,358.52, in today's quote at around 1200 hours, just showing some signs of a 204.96 point losses. But that is just a movement, not that shows us that if it was up at 3,824.35, 8.12, it did hit those records at opening. So in as much as we're seeing that downward trajectory, it's just markets trying to rebalance, and some investors dealing with the fact that we are seeing a bit of a decline in the price of gold, but it still remains in all-time highs. Then coming into the Eswatini Stock Exchange, we are still flat at 491.45. We're hoping to see some change here once we start trading on those new listings within the local exchange. So we're just hoping that the local browser will start showing some signs of movement once we see active trading on those NPOs. And then coming into into commodities, gold is still glittering above $5,000 per ounce, but not just showing some signs of a bit of a letdown today, largely driven by profit taking, Notsile, and also just a bit of movements into tech, but the market still haven't phased out the risks of a potential Greenland story there. And Brent crude is standing at 64.99 per barrel. Again, just taking cues from the U.S. economy in terms of the fact that we are seeing divergent views between, the interest rate path and what the fiscal path would like to see. So as we wait to see what the data holds, we might see a bit of an upward surge back to that $65 per barrel. But we do hope that when the Venezuelan oil comes into the market, the price may likely go down. And then in terms of the currencies, so the Lilangeni just remains relatively strong on the markets as of recent days. But what we're seeing here is just a bit of divergence, losing a cent in today's trade. We see the dollar sitting at 16.03, just losing a cent. So that's got to do with that movement in terms of gold prices and also the expectations within the U.S. economy. We're seeing the dollar gaining a bit of strength. And then also against the euro, we've lost some 6 cents when you compare it with the close of yesterday. So that's down some 0.02 percentage points. Again, driven by the fact that we're seeing a bit of stabilization and hoping that there will be a framework around the Greenland issue and all other conflicts. And then against the Japanese yen, as we saw with the Nikkei, just getting a bit of strength, there's a bit of renewed confidence in the Japanese economy. Therefore, we're seeing a bit of a decline again of the Lilangeni against the Japanese yen. Today, we're sitting at one Japanese yen costing at one Lilangeni costing 9.60 Japanese yens. Thank you, Natalie.
Thank you very much, Mr. Sibiya. In-house economist Sanele Sibiya sharing insights on all that is shaping the day's trade, understanding that it is the second trading day for this week. Otherwise, from myself and the team, until the next edition of Market View, it's been lovely. Take care.